Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to customer payment terms and discount policies. This will be similar to a prior practice problem, but we're going to add a few more variables, including the fact that if we have a cash discount, we could have an increase in the sales, another factor to be considering. Get ready, it's time to take your chance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. Note that we do have 2 tabs down below. You may have 4 tabs if you're working along with an Excel worksheet. 2 tabs with the answers to them, 2 tabs with the practice problems. We only have the practice problems here. The second tab will be a similar problem, although we will have an added factor in the second tab. The added factor will be that as we have a discount for the cash discount, we're going to assume that there will be an increase in the sales due to that discount. First tab is going to be, I'm going to go back to the first tab, similar kind of process, but we're not going to assume we're going to increase in the sales. We're going to assume the sales to be staying constant. So the second tab will add a bit more complexity with that new factor we will be considering. So let's see what we have on the left. First, we have the credit sales, the payment terms, net days, so meaning we expect to be paid within 50 days. If that is the case, especially if we're dealing from business to business type of customers, in order for them to deal with their cash management, to maximize their cash management, they will pay us at the end of 50 days. So we'll assume that they're going to wait the entire 50 days to pay us, which isn't good for our cash management because we'd like to get paid sooner with regards to the cash management. So we're going to assume that they pay us at the end of the time period. And then we're going to say, okay, well, what if we had an adjustment to that in order to basically increase the amount of payment or when we're going to get paid? So we're going to be offering a discount of 2.5% if paid within 15 days. We're going to assume that we have the same credit sales, but if we're dealing with business-to-business type of customers, then particularly business-to-business type of customers, we would assume that in their cash management, even though this discount is fairly small, and it's a fairly small discount, really what they're trying to do on a business-to-business, as we've seen in the cash management, is to maximize how long they're going to hold on to the cash, given the fact that they would have the same payment. So a small discount could alter that policy so that people will pay us a lot sooner if we take advantage of that small discount. So we can have a fairly small discount and have a radical change oftentimes, especially if dealing with cash-to-cash or business-to-business type of customers with that discount. So then we're going to assume the customers pay at the last day of the discount period, in this case, reducing the days that it would be outstanding from 50 down to 15. And then with that freed up cash, if we were able to free up cash, we're going to assume that we have a 10% return that we can get with that freed up cash. Whatever we're doing with that freed up cash, whether that be putting it into an investment account or paying off debt that we have, we're going to assume that we get a 10% return on it. So of course we want to then balance out the idea of the fact that we're going to have to pay, we're going to reduce what we're going to receive with the discount amount, but we're also going to free up the cash, and then we need to think about what will we do with that freed up cash. Can we take advantage of that freed up cash by getting some type of return on the cash, and therefore is there in the return on the cash, is the return we're going to get on the freed up cash worth the fact that we're going to have to lower the amount of actual cash that we're going to get? And the next one will add the added factor of having our credit sales increase in the next tab. So we're going to pick up our average receivables again. We're going to figure out what we think our average receivables are going to be in the first scenario. We're going to assume the average collection period of 50 here. And again, I would start off thinking about that in terms of not how to calculate the receivable, a financial number, because I would think about the thing that's a non-financial number, the thing that we would normally calculate if we were analyzing financial statements, that being the average collection period to back into, using algebra, the average receivable balance. So I'm just going to call this accounts receivable divided by the average daily sales to find the average collection period, which is given to us, and back into the unknown. That calculation will typically be accounts receivable. I'm going to put that in the outer column. This is what I don't know. I'm going to make that yellow. And then I would divide that by the average daily sales. I'm going to put a subcalculation to get the average daily sales. So average daily sales, colon, is going to be equal to the credit sales over here. Credit sales is going to be the 435 divided by the days in a year, which we're going to round out to a nice even 30 days per month times 12 months, or 360 days. So let's put an underline there, go into the Home tab, Font Group, and Underline. That's going to give us our average daily sales average daily sales in the outer column now being equal to 435,000 divided by the 360, 1,208. Let's do some indenting, selecting these three tabs. Home tab, alignment, increase the indenting. Selecting this item, Home tab, alignment, increase the indenting. That then would give us the average collection period. But in our problem, we have that. That's our starting condition. So we know the 50. We know the result here. We're going to back into the yellow number, the accounts receivable. Home tab, font group, underline here. Algebra would be x divided by 1,208 would equal 50. So then we could write that out and we can figure out the algebra, which would be equal to, how do I find accounts receivable? 1,208 times 50. And then we could double check that number by doing our normal math to figure out the average collection period, the 60,417 divided by the 1,208. So that's how I would recommend finding it. Many people will then show you, if you were to ask how to calculate it, they would basically give you this formula, which again, you don't need to memorize because you already know the average collection period and then you can use your algebra, but what you often see or will be given. So we're going to have the average collection period. So we know that. That's going to be the 50. So I'm going to pick up the 50 down here, and then I'm going to calculate once again the average daily sales. I'm going to do that this way by just picking up the same calculation, this, and then I can actually use my autofill. Let's autofill it down. Autofill, and I'm just going to highlight it down. I'm just copying those numbers, not numbers, the amounts over. If I double click, I'm just copying those over. Let's copy the formatting. I can even copy the formatting of basically this whole thing here. Home tab, clipboard, format painter, and then I want to format paint these. I'm just copying the formatting over. And then I can say, all right, well, the credit sales is going to be the same thing. It's going to be the 435. We're going to say this is going to be equal to 12 months times 30 days, or 360 days. Home tab, font group, underline. Doing the math, we're going to say this is 435 divided by the 360 gives us the average daily sales, 1,208. And that'll give us then what we're looking for, which is basically the accounts receivable, which will then be equal to the 50 times the average daily sales. And we get once again the 60,417. So now let's figure the accounts receivable turnover. Accounts receivable turnover would be the sales number that we've been calculating. So we're going to take the credit sales, and that's going to be equal to the 435. Divide that by the accounts receivable that we just figured out. That's going to be the 60,417. Let's put an underline there. Home tab, font group, and underline. And that'll give us our accounts receivable turnover, which is going to be equal to the 435 divided by the 60,417. So we get 7 there. It may be rounded, so you might want to add some decimals. Home tab, font group, or number group, add a couple decimals, 7.2. So then we have, we can figure out the average receivables if we have our second scenario here. So now we're going to consider our second scenario, which is this adjustment, same sales, but now we're going to assume that we're going to get paid in 15 days due to the discount. So we think everybody's going to basically want to take the discount because we basically have business-to-business transactions. So what would be the effect on the accounts receivable? Let's do it in the outer column again, same kind of concept. We're going to say this is going to be, let's do it this way. I'm just going to say this equals this one above, and it's going to be the same formatting. So I'm going to basically format paint this down. I'm going to use the format painter and select this down, and that'll pick up the formula for each item. Then I want to use the format painter for the entire section. So I'm going to select this entire blue area, go to the Home tab, clipboard, format painter, and then select this blue area, and it'll format paint the entire thing for us. So we have the same format there. And then we can say, okay, this is the unknown. The credit sales will still be equal to the 435. The days in the year are now going to be equal to the 30 times 12. That's the same. It's not like that changed. And then we're going to say this will be equal to the 435 divided by the 360. And then the new thing here is now that we're going to assume the average collection period is 15 days because everybody's going to be picking up the discount. Then we need to back into the accounts receivable. We can do that with algebra being x divided by 15. X divided by 1,208 equals 15. or this equals the 1,208 times 15. That gives us our 18,125. We could double check it down here by saying this equals the 18,125 divided by the 1,208. Once again, you could do that calculation this way, just basically adjusting the algebra. This is what you will probably see if you were to ask someone about it. Once again, I'm going to do this quickly by just using the formulas. This will be equal to, I'm going to pick up the same item up top. It's going to look exactly the same, so I'm going to autofill this down, and then I'm going to do the formatting, selecting this entire thing, go into the Home tab, Clipboard Format Painter, and then I'll format paint this one. So there we have it. I'm going to put an underline here while we're here. So let's go to the Home tab, Font Group, Underline. Then we'll put our numbers. I'm going to say the top number is now going to be 15. That's the new thing. And then our average credit sales are going to be the same, or the credit sales are the same. The days in the year are 12 months times 30. If we calculate this out, this is going to be the 435 divided by the 360. And then I'll put an underline here, Home tab, Font Group, Underline. And that'll give us our receivables, which once again will be 15 times the 1,208, getting another alternative to get to the 18,125. Then our turnover, same thing. I'm going to say this equals the turnover calculation we did up top. I'm going to autofill that down, putting our cursor on the autofill, dragging down. I'm going to select this entire blue area, go to the Home tab, Clipboard, Format Painter, format paint that entire thing. Then we're going to be taking our credit sales, which still are the 435. We're then going to divide that by the receivables, which we calculated now to be the 18,125. This equals the 435 divided by the 1825. 24 is going to be our outcome. So obviously our turnover is much better. We're turning over our receivables, which will free up cash. So if we freed up the cash now, if our receivables go down, we freed up the cash. And once we have that freed up cash, we have to think about, well, what are we going to do with that? We need to be able to get a return on it, on that freed up cash, in order for it to make it worth it. So let's think about the freed up cash we got. All right, the freed up cash is now going to be equal to the difference in the accounts receivable, we're going to say. So we're going to say the receivable before was this 6417 minus the receivable of the 18,125. So we're going to say that's going to be the 42,298.92. And if we have a rate of return, if we can do that, if we can use this to pay down debt that has an interest rate, or to put in the bank to have a return on investment and receive a return, we're going to say of 10% in one way or the other, either avoiding interest that we would have to pay by paying down debt faster, or by putting the money into the bank and getting a return on it. Home tab, Font Group, and Underline, and then Home tab, Number Group, and Percent. And let's multiply that out. We're going to say 42,292 times the 10%. That's going to be our return on freed up cash. But we had to, of course, reduce the amount that we're going to receive ultimately on the sales we have by the 2.5%. So we have to account for that. We have a cash discount. What will be the net effect of the cash discount? Well, if we take the credit sales, up top, and say this is going to be equal to the 435,000, and then we're going to say that we have our discount amount that we discount is going to be equal to the 2.5%. We're assuming everybody takes the discount. Home tab, Number Group, percentifying that cell, adding a decimal. Let's underline it. Home tab, Font Group, Underline, and then that's going to give us the cost of the discount. And so that's going to be equal to our total sales times this 2.5. Now the 2.5 is pretty small, but has a significant impact when we apply it to total sales that we're going to have. So if we think about this policy, we can say, all right, we freed up the cash of the and we're going to get a return on it of the 4,229. but it costs us, the discount is going to cost us $10,875. So if I was to say home tab, font group, underline, and then we're going to have a loss on the policy of, this is going to be the 4229 minus the 10,875. So it doesn't look good at this point to implement that policy. And remember, we're balancing out the impact of the cash receipts, getting our cash earlier, which is our cash management policy, and then the discount that we would need, of course, in order to do that. So a couple factors that we can then change in order to see if this would be more effective. Well, obviously we could lower the discount, because the discount should probably be able to be fairly low in order to incentivize people to give the cash sooner if they're just simply holding on to the money in order to maximize their return for cash management purposes. So we can do that. We can adjust when we want to get paid by. We can lower that to 10 days possibly then from the 15 days. We can also think about what the break-even rate would be down here for the return on the freed up cash that we would need to have in order for us to make it a worthwhile policy. And in the next problem, we'll take a look at us increasing basically our sales, because we would think that any discount, even a small discount to get paid sooner, will lower the price ultimately and lead to possibly an increase in sales. Let's consider that in the practice problems 2. I'll do this a little bit quicker here, but because we have a similar process, and then we're going to add the new data. So the credit sales are 780 now. The payment term's 30 days, which is pretty good in and of itself. That's our normal, often normal credit terms, 30 days instead of 60 or so. Customers pay as late as possible, so we're assuming they're going to pay us at the end of the 30 days if we keep it at that point. But then we're going to have credit sales increase by 10% due to the fact that we're going to offer a discount of 2%. So it's a small discount, but we think that that's going to increase the sales by 10%, and we're going to get paid faster. We're going to get paid within 10 days because they have to pay us within 10 days to get the 2% discount. Otherwise, we want it in 30 days. So the customers pay at last day of discount period. Then we're going to take that freed up money and we're going to get an 8% return on the freed up money. And then we're going to say that the gross profit is 25%. So we can think about what we're going to get in terms of the sales after expenses related to it. Okay, first part is the same. We want to figure out what the accounts receivable will be. I'm going to do that with the discount calculation. So the discount calculation will typically be accounts receivable divided by the average daily sales. So accounts receivable, that's the unknown. I'm going to make this yellow, right click and yellow. Then we got the average daily sales, which is going to be the credit sales. This will be equal to then the credit sales, which are going to be equal to the 780 divided by the days in a year, which we're going to round out to be 12 months times 30 days to make it nice and even. We're going to put an underline under the 360, home tab, font group, underline. That's going to give us our average daily sales. We're going to put that in the outer column, this being equal to the 780 divided by the 360 for the 2,167. Let's format this, highlighting these three cells or selecting them. Home tab, alignment, increase the indenting. I'll increase the indenting here. Home tab, alignment, increase the indenting. That will then give us the average collection period. And we are given that here at the 30 days. So we're going to back into the accounts receivable. We can do that algebraically. X divided by the 2167 equals 30. If we do the algebra, that would be equal to 2167 times the 30. We could double check that number down here by doing the normal calculation, which would be the 65,000 accounts receivable, but divided by the average daily sales of the 2,165 to give us the 30. Then I'm going to put an underline here, home tab, font group, and underline. We can also do that this way, which would be another, just same way to get to this number, but we're going to do it where we basically reverse the algebra to make the average accounts receivable on the bottom. So we're going to pick up the average, let's say average collection period, and that's going to be equal to the 30. That's what was given for us. Then I'm going to use this same calculation here. So I'm going to use the equal sign. This is going to be equal to the average daily sales I'm going to use the keyboard now and copy that. Control C, down arrow, holding down Shift, down, down, Control V, pasting these items here, and then I'm going to select these three. Well, I'll select the entire thing now. And let's select these three and just format them. Home tab, alignment, increase the indenting. This one, Home tab, alignment, increase the indenting. Then I'll use the same calculation. This equals the 780,000. This equals the 360. I'll do the math over here. This equals the 780,000 divided by the 360. Underline, Home tab, font group, underline. That'll finally give us to the accounts receivable, which is going to be equal to the 30 times the 2167. Let's put an underline under the 2167, Home tab, font group, and underline. Then we can calculate the accounts receivable turnover, which is going to be the credit sales. That's going to be the credit sales up top. And that's the number. I want the word here. And then the number. Then the number. And then we have the accounts receivable. We just figured accounts receivable being the 65,000. That's going to give us the accounts receivable turnover, which is going to be equal to that 780,000 divided by 65,000. Let's put an underline here, Home tab, font group, underline. Let's add some decimals here just in case. Home tab number, add a couple decimals. So it looks like 12 even. All right, then we'll say, okay, well, what would happen then with regards to the accounts receivable after our change? Once we have our change, let's figure that out. So we're gonna have a similar kind of process down here. We're looking at the data down below now. We had the increase in the sales of the 10%. So we're gonna go on over here and we're gonna do a similar calculation, same format. So I'm gonna say this equals this item above, accounts receivable. I'm gonna copy it, Control C, down arrow, then down, holding down Shift, down, 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 Control V. Then I'm gonna format paint it, selecting this entire thing, this entire blue box, Home tab, clipboard, format painter. Then I'm gonna format paint this entire blue box. And then I'm gonna go down here and say, all right, the credit sales are now gonna be 780,000 plus 10%. So if we pull out the trusty calculator, then plus, because I want to do this with a formula. I know this is not hard math-wise, but I want to do it with a formula. That's 80,000 times 0.1 plus 780,000. One way we can calculate it, or we can take 1 plus the 0.1, and that'll be 110% times the 780,000. So that's what we want to do, and I want to do it with a formula though. So I'm going to do it here and say, okay, this is going to be the 780,000 times, and then I'm going to put brackets and say 1 plus 100%, or 1 plus the 10% gives us 110%. Close the brackets. That allows me to use this cell over here so I can make changes if I want to do other estimates. That's going to give us the 858, and then we're going to say this is equal to 12 times 30 for the 360 days. Then I'm going to say this equals the 858 divided by the 360, and the amount will be for the average collection period is given at the 10 now, because we're assuming everybody's going to pay within 10 days given the fact that we have a discount. We can then figure out the accounts receivable by saying X divided by the 2383 equals 10, which means algebraically it is the 2383 times 10. We can double check that by doing the algebra here, or the calculation here. The 23,833 divided by the 2383 gives us once again 10. Now if we wanted to do that in this format, we're just going to do the same thing but reverse the algebra. This is how you might see it if someone was to give you the calculation. I'm going to say this equals this item up top, same format as that up top. I'm going to say Control C, down arrow, holding down Shift, down, 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 Control V. Then I'm going to select this entire box up top, Home tab, clipboard, format painter, and then format paint this entire thing. Then we'll do the calculation. This is going to be equal to what was given to us now at 10. This is going to be equal to the 12 times 30. I'm sorry, that's going to be equal to, let's just pick up the same number over here, the 858. And then this is going to be equal to 12 times 30. Then we could say this is equal to the 858 divided by the 360. And then finally we have this equal to 10 times the 2383 for another way to get to that 23,833. Then if we calculate our turnover down below, I'm going to use the same formatting as our turnover calculation up top. This will be equal to the credit sales. I'm going to copy that, Control C, down arrow, Shift down, and Control V. Then we'll do the calculation, or I could format paint it, copying this whole thing, or selecting it. Home tab, clipboard, format painter. Format paint this entire thing. Credit sales will be equal to, we're going to say once again, let's just pick up this 858, and then we're going to divide that by the accounts receivable, and that's going to be equal to the 858 divided by the accounts receivable for the 36. So this has increased a lot, of course, due to our discount policy from what we had before. So that's a benefit. So now let's go down and say, well, what's going to be the effect on the increase in basically the increase in the net income? Because we said that this discount is actually going to increase the sales, but we have to consider, you know, what will be the equivalent increases in expenses to accommodate those sales. To pick that up, we're going to say the profit margin is 25%. So we're going to say for every sales dollar, basically we're holding on to that to 25% of it. So we're going to say, all right, well, the current net income before we make the change, or the first proposal, current net income, I'm going to call it, is going to be sales. We're going to have the sales, and the prior sales were, we said, the 780,000. Oh, this is the wrong column. This is going to be equal to the 780. That's what we first had. And then if our profit margin is 25%, we'll pick up the 25%. Let's format that. We're going to go to the Home tab, the numbers, and format that. I'm also going to go Home tab, font group, and underline it. That's going to give us our current net income, which is going to be equal to the 780 times the 25. Let's indent that. We're going to highlight these. Home tab, the alignment, increase the indenting. This one, Home tab, alignment, increase the indenting. I'm going to compare that then to the new net income, or the proposed net income after the second option or scenario. So that's going to be sales. We're saying the sales now are going to be up to the 858 on the sales. The profit margin is still going to be equal to the 25%. Let's format that. Home tab, numbers, format that to a percentifying it. And then the font tab and underline it. That's going to give us our new net income. Putting that in the outer column. The 858 times the 25%. Let's format these, selecting these three cells. Home tab, alignment, increase the indenting. And then we're going to go to the new net income. Home tab, alignment, increase the indenting. And then we're going to have the, we're going to call it the increase is going to be here. Increase in net income from the increase in the sales is going to be equal to, I'm going to take the bottom number, the 2145 minus the top number, the 195, and that's going to give us our change. So the bottom line of the income statement we think is going to go up basically by that 19,500. So Home tab, font group, let's put the underline there. Now we want to calculate the return on the freed up cash. So we freed up the cash as well from this discount policy. So for that, I'm going to say, all right, we have freed up cash, which is going to be equal to the accounts receivable before, under the first plan without the discount, minus the accounts receivable we believe on average would be there after we consider the discount, which is this item. So we're going to free up cash. We're going to get paid sooner, the 41,167. So what are we going to do with that freed up cash? Well, we can pay off debt, hopefully, and avoid interest. So if we can avoid paying interest of, let's say, 8%, or we can invest it somewhere and hopefully get a return of 8%. So we're going to say, all right, we're going to get a return in one way or another, a benefit of 8% through the use of that cash. So we're going to say home tab number 8%, home tab font group underline, and that's going to give us our return on freed up cash, which is going to be equal to the 41,167 times the 8% for the 3293. But we also have the problem that we had to actually lose money due to the discount. So we're not going to collect as much on our sales because we gave a 2% discount. And we're assuming that everybody's going to take the discount. So if we assume that, we're going to say, all right, the credits, if we take the credit sales that we think we're going to have are now going to be the 858 for the credit sales, and we say that now the discount is going to be 2%, and everybody's going to take the discount. So we're going to say, all right, 2% on the discount that everybody's going to take. We're going to go to the home tab number group percent discount, home tab font group underline. That's going to give us the cost of the discount. Cost of the discount is going to be equal to the 858 times 2%. So if we figure out, okay, what's the net effect of this policy here, we're going to say, all right, well, we think that there's going to be an increase in sales, which if we pick up the expenses related to that after the profit margin, net sales or net income is going to increase by that 19,500 due to the 2% discount. We think we're going to free up cash due to collecting sooner, and because we're going to get an 8% return on that cash, either through paying off debt where we owe 8% interest, or through an investment where we get an 8% return, we're going to free up and we're going to get another 3,293. But we're gonna lose ultimately in terms of our sales 2% of the sales because everybody's going to pay us early to get the discount. And that's going to be a negative. I'm going to say negative of this 17,160. So then we have a net, it looks like gain. Net gain of the policy equals the sum of these three items. And we got a net gain. I'm going to underline this. Home tab, font group, and underline. Now, once again, this net gain could potentially be, we could say, okay, well, if it's a gain, we should do it. But again, the default is we don't really know what's going to happen if we were to implement a new policy, and it might have costs that we haven't really considered. We could be wrong. So again, we might compare this to what we think is going to be our return on investment and try to have some kind of threshold of what we think the relevant return on investment is worth the risk of implementing some kind of new policy. So we might once again do a calculation on the return on investment here to see if it's above a threshold of a return that we think is worthwhile for us to take on the risk of moving from the default, which the default argument from default is always, hey, I'm going to stick with what we have because I know how to do that. I know where, if you're going to argue that we need to move away from that, then you need to persuade us to move away. The default is we stay what we're doing. You need to give us some argument to move us away, and you have to get over a certain return on investment argument in order for us to consider it. Would basically be how many companies might approach that. So the next step might be to compare this to a return on investment calculation and see if it's above the threshold that would typically be the standard in order to consider a change.